Hey traders, Raghee here. That's a big shot of me. Let's get the screen in. Happy to be here. Thank you so much for your patience as we were getting through the tech issues from this morning. That's the first time we've had a tech issue for Charts and Coffee. I wanted to keep our streak of shows alive. So thank you for joining me for this this makeup edition, if you will, for a lot of people saying charts and whiskey. Yeah, that would not be the most productive. This is actually charts and tea. I guess this would be trading and tea for the after the close. So thank you so much for those of you that again, sorry about the frustration and the tech issue this morning, but let's get to it. All right. So I'm actually going to, because you guys were so kind to stick around, I'm going to talk about some of the points that I covered in the premium video today. I'm going to touch on a few of these, of course, always open to your questions. And so let me tell you a little bit about what's coming up this week. I think most of you know what we're going to be dealing with. And as we go into the latter half of this week, it's going to be a lot of GDP, PCE, Jackson Hole, Powell. And those cover all four of the macroeconomic pillars that we study, that I teach you all to study. And that means that, is there a possibility for a dip buy? Well, a lot like last week, yes. And where am I going to be focusing that dip buy? Well, first thing I have here, you'll notice in the notes, is something called Don't Fade Fridays. We closed in the upper quarter of the range on Friday, and that is not the kind of market that you want to short on Friday or even look to short on a Monday. And you can see why. The probability of a strong close on Monday suggesting a weak Monday, or strong close on Friday suggesting a weak Monday session, that's a low probability unless something dramatic, unfolded over the weekend. If we got some kind of news on Saturday or Sunday where the market wakes up on Sunday and says, look, we're going to short into this news. For the most part, barring anything like that, a strong Friday close is typically going to then, give us at least some strength on Monday. So then you'll notice there's another thing down here. What about turnaround Tuesday? I'll tell you what I told the folks in the futures room is, as long as we can stay above 15,200, I think that's a reasonable area of psychological support to be looking at. And on the S&P, I'd like to see us stay above 4460, 4450 would be fine, but I think 4460 will be a key level. And so I don't just assume because there was a strong Monday, we're going to have a weak Tuesday. Remember, the market's not just following some kind of knee-jerk reaction. Think about Monday and Tuesday, and even end of Tuesday, early Wednesday is really the market jockeying for position in front of GDP on Wednesday, PCE, and then day one of Jackson Hole on Thursday. This is really about those particular economic events. And what we'll see tomorrow really is, are traders comfortable going long into those events? There's been a funny little spin on the current Jackson Hole situation where we're going to have a virtual event. And a lot of folks are thinking it's going to ultimately lead to a much more bullish Jackson Hole response. I'm not sure I see the logic in that, but here's the thing. Some behavior in the market is really sort of a self-fulfilling prophecy. And so if market behavior is sort of geared towards, we're going to see strength, we'll probably see strength. So some of that is very, that type of suggestion, that type of expectation could play out because people go, well, sounds interesting, sounds good. The markets are in an uptrend. Great. We won't handle trade discount Jackson Hole as a bearish situation. And by the way, I wouldn't anyways, because I do not believe Jerome Powell has thus far fumbled the messaging around taper. Yes, we're going to get it. And I think he's been very clear that it's going to be a long, slow tapering process. And if that's the case, equities are not going to mind. How bullish am I going into the fall? Very. Do I know there's some seasonal factors and certain factors like this? Yes, but typically in an uptrend, regardless of the catalyst, I'm going to be looking for uh, buy the dip opportunities. Okay, and that is not going to extend to the YM, but most definitely to the S&P, the Nasdaq, the XLC, the XLK, XLV, XLF. Those are some of my favorite. Those are my 4 favorites at the ETF level. So that is kind of where we're at. As you know, as far as some of the conversation that we had in the premium video, so I thought I'd give you a little insight into that. And all right, so what are my expectations for XLV, Alex? Yeah, great question. I don't have. I try not to have expectations beyond what's on the calendar. So, for example, I can expect that looking at the economic calendar, and I like to use the Forex Factory calendar, I can expect as we go later into this week and we get core durable goods on Wednesday, we get preliminary GDP on Thursday, day one Jackson Hole on Thursday, as we get, a lot of this data that we're going to deal with throughout this week, PCE on Friday. The only thing that I can expect is that those are going to be events that will basically create some volatility. That's it. Up, down, no expectation. I just know there's going to be some volatility. So it's a little bit more, Alex, the thinking is a little bit more along the lines of, I don't know what pitch is going to be thrown at me from the mound, right? I do not know what that is going to be. But I do know what I want to see to take a swing at it. I do know what is in my zone. And so that's all I can say, that likely between Thursday and Friday, we're going to see some volatility. And if that volatility ends up at a level that I feel is a sufficient pullback, that's all I can say. My expectation most broadly is I will be a buyer on a dip. No question about that. So thank you for the question. Kelvin asked, you want to learn to trade options? Well, Kelvin, I'll tell you what, there are a couple ways you can go about doing this. We have a lot of great courses at Simpler. We have a lot of great masteries at Simpler. But what I would tell you is probably the best thing to start, and maybe the most affordable way to start, is check out Simpler Foundation. A lot of great educational based material there. We have a training room for those of you that are in the early stages of your education. That would be a really great way that's geared towards a new trader to start off your trading journey. So, Kelvin, check out the Simpler Foundation membership. I think it might be exactly what you're looking for. All right. Okay. Next up is, let's see here. Next up is my thoughts on ZB. Oh, I love it. Thoughts on ZB. My thought is we've been long, we've been bullish, we're following the path of least resistance, and it's been working. So my thoughts on this are, let's just keep going. I may not get a higher high. We may not breach 166 before I get the next pullback. So let's think about this from the perspective of what zone means what for me. Breaching 166, even getting to 166 is our third target at this point. And for a lot of our traders who have been in since the 162, 163 area, we've transitioned to a trailing stop. We notice that this is ZB at levels of resistance that it has fallen from before. I have to acknowledge it, even though the trend and the path of least resistance is generally still up, we are at a level that the sellers have shown up before. So I'm going to presume they're going to keep showing up until they don't. So I'm going to presume 166 to 167 are going to be two pretty significant upside resistance levels. Okay, so the next thing is, that's the pitch that I would treat as a target. What about the downside? Well, on the downside, we have our next zone of entry, which I think I'm going to be looking at as close to 163 even as we can get, with I'm open to 163.30. So both those levels look pretty darn good to me for another pullback buy. Now notice the previous pullback had blue grab candles. Now, I don't know if I still have this link, but for those of you that have been asking, Rug, I want to learn more about your tools and I want to learn more about your trading. This is probably the most affordable way to accomplish both that I've had. And that is you can pick up my workspace bundle with all my indicators, except for the HPMR. I want to make sure that's super, super clear. All of my indicators but the HPMR in the workspace bundle, and then 2 sessions of live trading with me. We're going to cover intraday and we're going to cover end of day settings and use. And then we're going to throw some trades out there so you can see these indicators at work. And so in terms of live trading and the indicators, this is probably the lowest in terms of price that we've ever offered for that. And so I'm pretty stoked because I know not everybody wants to commit to live trading 4 days, 2 days in a class. I totally can accept it. It can get pricey. But this is a really, really good way to accomplish both those things. And then this is going to give you a really good taste of my end of day trading that I do in the Sector Secrets Mastery and some of the day trading that I do in the Futures Room and the Sector Secrets Mastery. So to give you a really good sort of buffet, and you get to take home some of the meal because you're going to get the indicators. I need to work on the analogy for that one. I'll have a better one for you guys. But that trading is going to happen September 10 and September 13. So if you've been kind of thinking, yeah, I want to get a little bit more into these indicators and get some of these trades, that's a really good way to do it. So if you haven't been to simplertrading.com/Raghee-workspace-bundle, check it out. Really looking forward to this. It's the first time we've done something like this, and I'm super stoked. And these are the tools that I'm going to be using to get back into the ZB. So 34 EMA on the close, 34 EMA on the low. Do you see how we had the blue grab candles last time we got down there? That's exactly the pattern that I'm looking for again. And so, and if we get a pullback towards the mean of the V score, yet another one of the tools that you get, that would really just be perfect. And by the way, where the V score is now tells me that, yeah, not that we can't go higher, but I would be thinking the pitch that I'm going to get is going to be a little bit more of another entry rather than a brand new high. Thank you for the question. So next up is, did we miss the pullback buy on the NQ? I'll tell you what, Karthik, I'm gonna be straight up with you guys. And yesterday, sitting here in my office at this very desk, in this very office, and I was really upset with myself. I was upset myself for 2 reasons. One, I probably traded a little too cautiously last week. We had a great string of winners, and the markets are into the last 2 weeks of August, which typically I usually check out the last 2 weeks of August. I mean, not through summer any longer, but the last 2 weeks, I'll try to spend a little bit more time with my family or work on some other projects and just give my mind a little bit of a rest. Okay, so that's a habit that's there. The other one is there's been so much bearishness. And I will tell you, it's frustrating. And I'm not blaming the bears and the analysts out there who keep calling for tops in the markets because they're overextended. I even did a premium video last week for the members, and probably as much for me to say these are not parabolic markets. Today, we might be edging towards it, but we weren't on Friday. That was not a parabolic market. Parabolic markets are ones we can call that are overextended or looking to pull back, but we weren't on Friday. So, I will say, Karthik, yeah, there's a really good chance that here's what I believe. There's a really good chance that what we had last week was an aggro setup, a setup that was risky because of the catalyst for the move. I will say the same thing about this week, but a pullback's a pullback, and that was one. Will we get another one? I think we probably will. We've been getting about one a month, and I hope that's not the only one we get for August. But if it is, I think I probably erred on the side of caution, which is usually my sort of default. And I'm not going to kick myself. But yeah, this is when we let, there's just this sort of bearish creep message that's out there, just creeping in. And I was talking to the folks in the futures room. I got to shut the TV off. I think I was talking to Lorna. I got to shut the TV off. I got to shut a lot of the analysis off that is not in sync with what I'm seeing when I know are high probability trades. This market hit a brand new high. Of course it did. It's an uptrend that hit a retracement, and now it's attracted buyers, and those buyers are moving it higher, and the shorts got crushed. That's how dips work. So I'm a little upset at myself, but I want you guys to know, even the quote unquote pros, we miss stuff too. We get it wrong. We sometimes let outside ideas start to influence, and I was probably being too cautious about this trade. The other thing too is, before I get too hard on myself, we're long things like XLV already. We're long things like XLC already. We've got some long positions, even in XLP that we built back in June with September expiry. So the other part of this is I might have actually been a little lackadaisical going into late summer because we've got really deep in the money winning positions. And when you're flat, you have this, more aggression to get a position. When you already have a bunch of winners, we set up the IWM last week. When you already have a bunch of winners, that's the other part of it. It's easy to be a little lackadaisical. It's easy to say, well, I don't love the setup. I like it, but I don't love it. And then we pass on it. So Karthik, I know that's a big answer, but that's really, I think right now, what was going through my head. Yeah, on NQ, but I think a lot of things, straight up on quite a few things. Yeah. Next question or comment, Mohammed, you are giving real-time trade alerts in Sector Secrets Mastery. Yes, that's the whole point of the mastery. Not only are they real-time alerts, they're setup alerts. So I'm not telling you I just got in. I'm giving you as much heads up as possible that I want to get in and at what price I will get in. And then we follow that up with a fill alert. And that's something we've been doing through this latter part of August, where a lot of traders say, yeah, Rag, I can see where you want to get in, but maybe you sent the alert out a couple of days ago and, life is busy. Could you remind us when you get in? So we've been doing that. Big thanks to Lorna. We've been doing that more lately too. But the real heart of the Sector Secrets Mastery is the ability not to see, hey, by the way, I got in, but rather, hey, I want to get in. And this is the price level that the underlying must reach. And then I will buy this particular expiration, this call at the time that the underlying is at that price. So I'm giving you what I call my triggers. I hope that makes sense. And as far as, you say giving away, we're not giving away the bundle, but yes, we have our bundle offer right now where the indicator bundle and the live trading, and we've never done the live trading with it. So, however you want to look at it, but my question is, do all these get alerted in the Sector Secrets? No. So when we have a class, look, I will tell you, Mohammed, will there be some overlap? Probably. But as a general rule, if I have live trading going on, those are live trading trades. They are not going to get sent to all the different rooms that I'm in. So as a general rule, no. Might there be some overlap? There might be, but no, as a general rule, live trading is live trading, Sector Secrets is Sector Secrets. So, yes, that's happening on the 10th and 13th. And thank you for the question. Do the indicators work on TradingView? Victor, we are almost to the point that all my indicators, including the HPMRs, we're almost there, but all my other indicators are available on TradingView. Yes, I've been using TradingView a lot, quite a bit. I love the platform. I've been an avid user for a lot of years now. And so, yes, more and more of them are available. The Pines editor, Pine Script on TradingView, it's a really robust language. I do like it, and I'm very lucky that Lorna is fluent in it. So when I get some sort of idea, she's able to make it happen. I can try my hand at some of the code, but yeah, we're able to get a lot done on TradingView, which I'm very excited about. So many of them are, absolutely. Do I use TradingView and TOS? Yes, I do use TradingView TOS, and frankly, I use TradeStation as well. I'm a big fan of the TradeStation charts. I don't have all my indicators on them, but I will say the reliability of TradeStation is the platform for me. TradeStation 10 is very, very good. And by the way, I execute trades through TradeStation. So while I don't necessarily need their charts, I do use the feed. And take a look at the bottom of my of my trading view. See how it says trade station at the bottom? I'm using my trade station feed to get live real-time futures quotes, futures feed. So I like to execute trades through TradeStation. They're a great platform. They're a stable platform, and the data does double duty because now it could fuel my charts on TradingView. So yes on Toss, TradingView, but that's it. I don't believe there's really a fourth or fifth platform. That's more than enough right now. All right. Let's see. Raghee and sector is the education at certain levels for beginners. I will tell you this. I don't know about beginners or advanced, but I will tell you this. The way that I trade in the sector secrets is the way that I've been trading for better than 3 decades. And it's long calls and long puts. I don't do spreads. I don't do multi-leg strategies. It's very simple execution. So does that cater to beginners? I think so. Me telling you that you're not going to have to put on a multi-leg option strategy, and you don't have to use a margin account. We use cash accounts, so you don't have to deal with the pattern day trading rule. We buy low-cost options. So I'm usually in the vicinity of $5 to $7 or less on options. So it's a very scalable approach. You have 10,000, great. You have 110,000, no problem. It's a scalable approach. So I do think it's very good for beginners. Frankly, if you're a beginner coming to sector secrets, that's less to have to unlearn of a lot of bad, overcomplicated option strategies. So you're going to have a little bit of an advantage in that regard, because unlearning, boy, that's a whole lot harder than learning. So that's probably a great place to end our makeup session for Charts and Coffee. And there you have it. Thank you so much for your time. Thank you for the patience. We'll be back at our 9 a.m. time tomorrow. So I will see you then. In the meanwhile, be good to each other. And be sure to check out the free videos over at the Simple Trading YouTube channel, including the ones that we'll be putting out tonight, following up on that Russell trade that I've been walking you through now for a few days. All right, gang. Until then.